Well, that escalated quickly. Stocks just want to do it or go higher. That's right. Today, there was a stock market trap because the bears got squeezed and squeezed and squeezed and squeezed and went higher and higher and higher. Right now, the market is remaining irrational longer than the bears can stay solvent. And right now, these are easy dollars. Why are they easy dollars? Because everything's a buy the dip right now. The note for today told us that we were cautiously bearish going into today, but now we closed above the candle high for a second time, which means we're fully bullish on the daily, the weekly, the monthly, the annual, and the quarterly. We even have a gateway for the bears now, another cheat code to make sure we understand where the market could go. If the market's remaining irrational and easy gains are here or easy dollars, remember, it takes 100 pennies to make a dollar. So when you see one, two, three, four, five Benjamins there or $5, that's 500 cents. That's a couple of cents there. It's way more easy. If we look here to a weekly candle, here's what's really notable. As of where we are in after hours here, or if we look to the E-mini futures, we currently have a bullish engulfing weekly candle. Why does that matter? Well, we had one over here, and that was a bullish engulfing weekly candle as well. We also had one here, and that was a bullish engulfing weekly candle. Bullish engulfing weekly candles are generally bullish. So, what did our notes say going into this weekend? Higher lows are sufficient. Well, I also told you that that did not happen. But if we get a bullish engulfing weekly candle, what does that mean? The note doesn't matter. It's a bullish engulfing weekly candle. It's bullish. So we defer back to our notes where we said that we have to wait until Friday at 4 o'clock. Right now, higher lows will remain sufficient for the daily, weekly, monthly, quarterly, and all time frames. The gateway for the bears means that if higher lows are sufficient, and now we look here to our daily chart, what does it tell us? Let's go to the 1 day. We're looking at the L. The L right here tells us that 643.51 is the low from today. If we print a lower low, that would be this number. If we don't go below 6.643.5, it means that the daily, weekly, monthly, and all time frames are by the dip right now. Let me remind you of what we talked about on the weekend as well. I don't have to show you the note because I already did show you a few times. We talked about how we might be staging a monthly higher low to defend. I think that's what we did. If we look here to our monthly candles, it's actually really bullish. So we can have opinions. We can tell the chart where we think it's going to go. People on YouTube can say that every time I make a video, I'm wrong. I don't particularly care. I'm here to make money, not friends. And right now we got a step, a step, a step, another step, and another step. And what? Our stairway to heaven. We continue to go higher. So if we look here, we got a failed breakdown, close above the high, close above the high, close above the high, close above the high, and we're about to go back above the high. What is that? It's bullish. So I can tell you that there's a need for a warning, and I'll go through and tell you exactly the reason why we should think about that now. A little bit later in the show, way that I'm managing my account, like I mentioned before, is by raising cash. I don't want to sell out of everything. I want to let my winners run. But I think a lot of people are surprised a month and a half later that we're nearly at 656. We're within 1% of going there now. People continue to be surprised. For the rest of this week, I think what's happening is that people are front running the number into tomorrow. Remember, everyone's getting fired unless they give Trump what he wants. So what does he want? He wants the good data right now. And the data, oh, it's looking a lot better. Look here to a 10-minute candle or a tree 50, which is basically MOC time, market on close. We get that pump right into the close here. And now we're at all-time highs and after hours. Whoa. Yeah, whoa. Bullish. Really bullish. We talked about it on this morning stream as well. So if all time frames are bullish, and all we really have to look forward to is going to be average hourly earnings. And then next week we have a few events, but it really comes down to Apple on Tuesday, I think. As we go into September, October, November, and later, it starts to get increasingly curious because the West versus East is really going to have a big showdown here. All right, let's close that one out. Here's a few things that are fairly interesting. There was actually an increase to the money market funds. Let me have a look here. Money market funds have now increased to $7.26 million. So the reason why this is so curious is because if we think about where the market could go from here, it's really dependent on what happens with interest rates. If we look at the 10-year note, Actually had a pretty big today. Actually down to a pretty nice low, right? Printing lower lows here, and volatility is also actually coming down as well, down to the low teens or 15. So if we think about all of these different things and people raising more money as the Fed is set to cut rates, that really means people are really scared, just like me, right? They're scaredy cats. Is there any reason we should be scared? I'm gonna walk you through that right now. If you could please consider smashing a thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. So what I want to remind you of is that there's always reasons why we should want to buy insurance. This is one of them, by the way. This is a reason why you might want to buy insurance between now and the end of the year. There's also this right here. We talked about uh, the importance of the head and shoulders, knees and toes on these patterns. So we went through this yesterday and the day before. Let me quickly remind you of what that looks like right now. So if we have a look here, we don't see the data anymore, but there's your shoulder, there's your head, and then there's your lower highs, there's your lower lows, and that's a stock market crash. Where we are right now is basically doing the same thing. Draw a line, you got your head that pops over, you got your lower highs. We go below 50, that's a lower low. From October until the low, that was months. From the time of October until the crash, that was still months. There was months of leading indication. Same thing that happened with DeepSeek 1.0. I didn't predict the day that DeepSeek would drop, but I said, "Oh, this thing looks real," and I think this could hurt U.S. stocks, and it did. So, if their first release or their update to R1, which was supposed to be smart, was not, but now this one's going to have agentic AI. This could be good or it could be bad. The last update from DeepSeek was not all that compelling. But right now, investors are literally teetering between fear and greed. That's what neutral means. It means they're unsure. If we go down a couple points, it might become a self fulfilling prophecy to continue to go lower. On the heat map today, a lot of stocks closed green. So if we've managed risk, and managing risk for me means one of three things. Basically means that we are going to set stops, raise stops, and trim. That is all that we can do to manage risk. Otherwise, we want to enjoy what's happening to our accounts. Let me remind you of exactly what that DeepSeek headline can mean. Let me pull it back up here for 1 second. End of the year. Wait, September, October, November, December. Okay, roughly 4 months. Our system, SH, PSQ, SUXX, our system is telling us that betting against semiconductors for the next 3 months is a good trade. You're going to get 11 to 1 risk reward. 11 to 1. Wow. SH, yep. Next 3 months, that's betting against the S&P for the next, for 6 to 1 risk reward. And then also PSQ for the next 3 months, 3 to 1 risk reward. So what this basically means is that chips lead tech and tech leads SPY, and all of these are due for alerts with very nice risk rewards. What could cause semiconductors to go down or tech or the S&P? Well, we've gone through this before. It's not our first time. Here's a previous card as to when I was already getting anxious about SH. Ever since then, I've been getting increasingly nervous. I've been managing risk. If we have a look here, there's something very curious. If we go through and ask ourselves the recipe for buying a stock, and I really encourage you to pause right now if you need to. Go here to this video, to this card. It's a third link in the description. It should say free notes. And yesterday we talked about how to make a plan. If you're not prepared for the worst case scenario, you were not ready. I'm surprised we went higher today, but I'm not unsurprised. Right? I had my notes. So we want to expect we're going to go higher. We want to be prepared for the worst case scenario. That could be that we drop down to 610. And if you did not take advantage of the liquidity into this move higher here, but you were scared only a few percent lower, you need to do it now. Just like your house. You never want it to burn to the ground, but you buy fire insurance just in case it does. That's what this might be. It's the exact same recipe I saw before. So I hope I'm wrong. I own stonks. My stonks are going to lose value if they go down, but I'm not going to sell out completely yet. Right now, I have SH, PSQ, and SOXX all on my watches for the same reason. They're hedges. What's the forecast? Well, it's at least 3 to 1. I can make 3 to 1, 6 to 1, or 11 to 1. Those are really good odds. Wow. Yep. Type of alert. These are algo alerts, which means this is it. That's our confirmation. They're likely oversold again now. I can quickly double check to see if we're due again for next week. No, we're not. As of right now, we're not oversold. We're no longer oversold on this, which means that we're not going to get more alerts after this. They're either going to pass or they're going to fail. And then finally, what's the catalyst here? Well, trade war, military war, technology war, any stage of war. War? Wait, this happened only 2 hours ago. What does this say? U.S. and Taiwanese defense officials held secret talks in Alaska. This came after meetings were canceled. That's not good. The other one's not good. And then finally, I think I forgot to show this because honestly, I had to re-record. I can't remember what I did in the first video versus this one. This head and shoulders, knees and toes is very curious because I think I mentioned it early in the other video. I forgot to do it here. Let's look a little bit closer because I've been talking a lot about a leading indicator. It's Bitcoin. We'll look right here. There's our head and shoulders, knees and toes. Let's go to Bitcoin now. Why? Well, I don't like saying this because, again, I might make it real. Again, I got a little bit of superstition sometimes, but shoulder, head, shoulder. Huh? What? Shoulder, head, shoulder. Did it wash out? Ah, shit. It washed out. Yes, we got lower lows here. We got lower highs. It's starting an arrow pointing down. Oh, and there's big red volume. And I made a new all-time high just before losing it. Is the crash here? Oh, boy. Oh, boy. Oh, boy. Looks like we're awfully close here. The S&P might be special. It might keep going higher. The NASDAQ might be special. It's poking above resistance here. Is it going to keep going higher to infinity and beyond? I'm not sure. When I look at this right here, though, it's very hard for me to ignore the pattern because this Bitcoin leading indicator has worked really well for me. Right here, we got the head and shoulders, knees and toes. Head and shoulders, knees and toes are forming. Why do we have low, lower low, and we have the lower low on Bitcoin? Maybe the S&P is going to follow, or maybe the trap continues. Let me make it really simple for you. I mentioned 2 numbers before. Let's go back to those now. I talked about the gateway for the bears. So I'm likely not going to publish a video until next Tuesday. I will try to get one out tomorrow. But if I don't, the gateway for the bears right now is 643.5. That would be a daily lower low. Then we got to look to the weekly lower low after that. It should be back in time for me to give you an update. But the second thing is that it really matters where we close at 4 o'clock tomorrow. Why? If we have a bullish engulfing candle, it does not matter how I feel. Why? The lines are going up. Might be irrational, but that's okay. Might happen for longer than I can remain solvent. As of right now, corrections have not been long-lived. If we look closely here, again, I'm highlighting the corrections. Let's go back here to SPY. The last time we had a multi-week correction was right here. We have one and done, one and done, one and done, one and done. Ever since we had our V recovery, they're one and dones other than this really small move right here, which led to a bullish engulfing week. So as far as I can tell, the market does not want to go down. There's a relentless bid. And finally, when it actually rolls over, it's going to probably all end in tears. But until then, we're likely going to continue to go higher. If you want to watch the video now queued up on the left, it is a member-only one. But if not, come hang out with me at 8:30 a.m. and I'll try to help you as best I can. Thanks so much.